Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhania. The headlines we're tracking for you tonight. The Lal Street ends lower for the second day. The Nifty and the Sensex end the session at over 1 month lows. BSE companies erase a market cap of nearly 7 lakh crore rupees in the last 2 days. Broader markets underperform. Reliance Retail acquires wholesale food product company Metro Cash and Carry India for 2,850 crore rupees. The move will enhance Reliance Retail's physical presence and bring in a large number of Kirana, wholesale customers and suppliers into its fold. A parliamentary committee calls for an ex-ante framework to identify anti-competitive practices in digital markets before they get monopolized. The committee says that players capable of negatively influencing markets must be identified, mentions 10 anti-competitive practices that competition law must address.
राज्यों को कोविड वैक्सीन की प्रिकॉशन डोज बढ़ाने पर और लोगों को प्रिकॉशन डोज की अहमियत के प्रति जागरूकता लाने के लिए भी कदम उठाना चाहिए.
Modi chairs a high-level meeting on COVID. Health Minister Mansukh Mandavia tells Parliament the ministry has advised states to strengthen surveillance, conduct genome sequencing of positive samples, and are considering 2% random sampling of all international passengers at airports. The World Health Organization chief says he's very concerned about the COVID situation in China, appeals for detailed information on severity of the disease, hospital admissions and intensive care requirements. As per WHO data, the country has reported over 23,000 new cases in the last 24 hours.
3, 2, 1. Let us all...
A flat market debut for winemaker Sula. The stock lists at a 1% premium to the issue price. MD and CEO Rajiv Samant says that theirs will be a 1,000 crore rupee brand in the next 5 years. Karnataka High Court sets aside Income Tax Department seizure order on Xiaomi India's fixed deposits worth 3,700 crores, says the taxman's order against the smartphone maker was arbitrary and revealed a preconceived conclusion.
The battle is not only for life, freedom and security of Ukrainians or any other nation which Russia attempts to conquer. This struggle will define in what world our children and grandchildren will live.
Ukraine's President Zelensky receives a standing ovation at the U.S. Congress, appeals to U.S. lawmakers for more assistance in the war against Russia, expresses his gratitude for American support, tells them, and I quote, "Your money is not charity." Sam Bankman-Fried extradited to the U.S. to face multiple charges in the FTX collapse. 2 of the FTX founders' colleagues plead guilty to fraud-related charges. All of that and more coming up for you in just a bit. On to the day's trading action. Markets taking it on the chin for the second straight day. The Nifty and the Sensex fell 0.25%, ending the session at over 1 month lows. BSE companies wiping out a market cap of nearly 7 lakh crore rupees in the last 2 days. Broader markets underperformed the benchmarks. However, FIIs are net buyers. Net buy figures stood at 928 crore rupees, while domestic institutional investors' net buy figure stood at over 2,200 crore rupees. Prashant joins us now to update us on the market action and what tomorrow could possibly hold. Prashant.
The market selling off and coming under pressure today once again. Keeping in line with the kind of volatility we have had for the last few sessions, today was no different. Just consider the amount of swings that we had. We started with the market making a day high, 118-point higher push. This happened in the first 10 minutes of trade. There was a 245-point sell-off and the market made the low for the day. Then you had a 100-point pullback once again. And then in the final 45 minutes of trade, there was another 65-point pullback. And the Nifty, by the way, ending about 80-odd points in the red today. I'll come to some levels which are important and what we've done today, but it was largely down. So real estate, PSU banks, metals, autos, energy, there was not one sectoral index which actually ended in the green. Nifty cuts, large caps which lost, UPL, Mahindra & Mahindra, names like Bajaj Finserv, Eicher, BPCL, Indus, and I could go on because it was that kind of a day. Broader markets, I have to say what was different was that advanced decline ratio was extremely poor. We've not had this bad advanced decline ratio for a while now, which we saw today. Thyrocare was down sharply. Union Bank, PSU banks continue their pullback, as I said. These defense names, Mazgaon Dock, Cochin Shipyard, Garden Reach Shipbuilders, they all saw pullbacks. There were also names like Deepak Fertilizer and Karnataka Bank which lost quite a bit. For the last 5 or 6 days, the Nifty has been making lower lows, which is technically not great news. Some of the short-term moving averages have turned negative. And today the market sort of touched and bounced off a rising trend line from the lows of June 2022. It's bounced off that level. We just need to see if we are able to hold it. It broadly comes to about 18,100. US market cues will be important, although trading there is also thinning out as we go into the end of the year. But I think tomorrow will tell us whether that 18,100 level is to be held or is to be broken. Back to you.
Shant, many thanks for joining us. That was the market action of the day, but here's the big corporate story tonight. Reliance Retail taking another step in expanding its empire. It signed a definitive agreement to acquire 100% stake in Metro Cash and Carry. The deal will be sealed at a cash consideration of over 2,800 crore rupees. And through this acquisition, Reliance Retail will have access to the company's outlets and retail and institutional buyers. Mangalam joins us now with the details of the deal and what this means for Reliance Retail. Mangalam.
Well, the news is official now. The company has informed the exchanges of them purchasing Metro Cash and Carry's India business. The deal was struck at a value of 2,850 odd crores. A little about Metro Cash and Carry. Of course, it's the Indian subsidiary of the global leading international food wholesaler. It entered India in 2003 and it was the first to introduce the cash and carry business to India itself. Where do the metrics for that company stand now? They have 31 large format stores. FY22 revenue was close to around 7,700 crores and they sell to kiranas and other small businesses as wholesalers. And this is where Reliance sees benefits. The biggest benefit they get, they further strengthen their physical store footprint. They give access to a wide network of Metro India's stores in prime locations. But importantly, they also get access to a large base of registered kiranas and institutional customers and a strong supplier network. And that exactly has been the case for Reliance, where they're eyeing the entire ecosystem. Analysts are looking at the scalability and synergies in this deal, and importantly also eyeing whether there would be any horizontal or vertical expansion of Metro Cash and Carry, which currently is into wholesale. Can it actually go ahead into retail or not? And that will be important because Reliance recently launched their FMCG brand Independence with a wide array of products like edible oils, pulses, grains, packaged food, etc. And it's this ecosystem that everyone is playing on. The Independence brand, of course, first launches in Gujarat, then scales nationally, and this asset will be important for them to scale that business nationally as well. They've been growing through acquisitions and tie-ups. This year itself, there was brands like Socio, Campa Cola, Pret a Manger brought by Reliance, and this over and above the near 10,000 crore investment that the company did in FY22. And of that, some of the important ones included the likes of 7-Eleven, Just Dial. We had a bunch of designer brands that came in, and Dunzo too. So what does all of this mean for Reliance? The big, the big ambition that Mukesh Ambani had given in the annual general meeting, saying that Reliance Retail will become the largest segment within the group. The company goes ahead and puts their money towards acquisitions. 2,850 crores for a 7,700 crore rupee sales brand. Metro, not particularly bad. Analysts would just eye scalability and synergies.
And the big global story, China continues to see a spike in COVID-19 infections just a month after the country eased zero COVID policy. Now, according to the World Health Organization, China has seen over 23,000 confirmed cases of COVID-19 in the last 24 hours. WHO has further said, and I quote, "It is very concerned about an unprecedented wave of COVID cases in China and has urged the country to accelerate its vaccination process of vulnerable groups." Back home, Prime Minister Modi held a high-level meeting to review the COVID situation in the country amidst a spike in COVID cases in some nations, including China, South Korea, Japan. Health Minister Mansukh Mandavia gave a statement in Parliament. He said the ministry is keeping an eye on the COVID situation and taking necessary steps. The Health Minister urged that people wear masks and maintain social distancing ahead of the festive season.
राज्यों को भी स्थानीय स्तर पर सामुदायिक निगरानी बढ़ाने के लिए और कोविड को नियंत्रित करने के लिए सलाह दी जा रही है। राज्यों को जीनोम सीक्वेंसिंग बढ़ाकर सभी पॉजिटिव केसों का जीनोम सीक्वेंसिंग करने की सलाह दी गई है। आने वाले त्योहार और नए साल को ध्यान में रखते हुए राज्यों को सतर्क रहकर लोगों का मास्क पहनना, हैंड सैनिटाइजर करना, रिस्पायरेटरी हाइजीन का ख्याल रखना और सामाजिक दूरी बनाए रखने की जागरूकता लानी चाहिए।
In India, we have the advantage of hybrid immunity. We have experienced all the waves of the virus, but there are two specific aspects we need to consider. One is that this is an Omicron variant, which in general is not as bad as the Delta variant. You know, this idea that everybody must suddenly start to mask up is, I don't think, completely appropriate, because I think we have to think about why we want to wear masks. And certainly for people who are vulnerable to protect themselves, it's important to wear masks.
I think for us, overall, I think COVID-19 testing over the last few days has been kind of in line with what it used to be. So we aren't seeing a spike in testing at this point in India. I think because of the volumes of COVID testing being so down over the last 6 months, I think the supply chains have not been tested for a spike. So, you know, just getting ready in case there is a spike, I don't think our supply chains right now are ready, you know, with the kind of inventory required of kits, reagent, as well as, you know, just the lab readiness.
Well, so no spike in cases at this point in time, nor in testing. Now, the Health Ministry has clarified about a message that's circulating in WhatsApp groups regarding the XBB variant. The message claims that the discovered XBB subvariant of Omicron is 5 times more virulent and has higher mortality rate than the Delta variant. However, the Health Ministry has clarified that the message is fake and misleading. And this is what we want to point out to all of our viewers, that it is important to be alert and vigilant, but there is no need for panic at this point in time, and certainly do not forward unverified information. Do not forward WhatsApp messages that, like this one that you're seeing on your screens, that has been called out by the Health Ministry, which claim that this variant is much more virulent and deadly than even the previous variant that we saw, which was the Delta variant, which really devastated India. RBI ED Ajay Chaudhary says the central bank is fully committed to keeping digital currency transactions anonymous, but is looking at various tech solutions, legal options to enable this. The central bank has also clarified all tax provisions applicable to paper currency will also apply to the digital currency.
As CBDC, an electronic form of sovereign currency, it should imbibe all the possible features of physical currency, including anonymity. This presents a challenge as all digital transactions generally leave some trail. Possible way of ensuring anonymity include purging records of CBDC transactions or developing a framework for restricting anyone from accessing any such records. So therefore, we are fully committed to the concept of anonymity, like what we see in the case of physical cash.
Now, it was a flat debut for winemaker Sula. On Dalal Street, the stock listed at a 1% premium to the issue price. MD and CEO Rajiv Samant told CNBC-TV18 that theirs will be a 1,000 crore brand in the next 5 years, adding that they're targeting margins in the 25% range.
85% of our wine revenue, of our revenue today, comes in from our own branded wines. But in terms of wine, of course, horizons are long. Definitely, we've got some plans for next year. I'm looking 5 years out. I see no reason why, you know, in a few years down the road, this should not be a 1,000 crore company. I don't see anything, any factors that are really going to push back on that. And really, I would say that that's something that we definitely have in mind. And in terms of margins, we've done some terrific work over the last couple of years, really to streamline things. So I definitely see margins remaining stable. And, you know, it's not a bad guess to say that it's going to be in the 25% plus EBITDA margin range. That's definitely something that we're looking at.
Well, that is Rajiv Samant of Sula. Now, the Karnataka High Court has set aside Income Tax Department's seizure order on Xiaomi India's fixed deposits worth 3,700 crore rupees. The court observed that the IT department's move was illegal, arbitrary and contrary to law. The Parliamentary Committee on Finance has called for an ex-ante framework to keep big tech companies in check and curb their monopolistic tendencies. Pariksha joins us now with more. Pariksha, take us through what the committee is thinking of.
The Parliamentary Committee on Finance has red-flagged anti-competitive practices of big tech companies and has called for an ex-ante framework legislation and identification of players that can negatively influence competition. The Parliamentary Committee has called for a Digital Competition Act. to regulate competitive behavior in digital markets. The report says an ex-ante framework is a must to evaluate anti-competitive behavior before markets are monopolized or distorted. The Competition Commission, according to the Parliamentary Committee, needs a digital markets unit to strengthen its ability to regulate markets and also predict and forecast anti-competitive behavior. Significantly, the committee has said systematically important digital intermediaries must be identified. These are intermediaries who can use their influence to distort the market or monopolize the market, and they should be made to inform CCI before any merger and acquisition or market concentration. These intermediaries must not use any data not publicly available. They must give annual reports to the government as well. The panel has said the government must focus on anti-steering, platform neutrality, bundling and tying, data usage and deep discounting. Currently, the CCI is an ex-post framework which kicks in when anti-competitive practices are reported. And what we need, according to the Parliamentary Committee, is an ex-ante framework to prevent any moves or actions towards eliminating competition or distorting markets. The CCI and MCA had testified before the committee. As per the report, they also want an ex-ante framework. We also see from the report that the likes of Amazon, Apple, Facebook, Google had testified before the committee, and among domestic players, Paytm, Ola, Swiggy and Zomato were some of the players who testified. The report has also called on the government to study laws abroad, especially in European Union and in the United States, harmonize the Indian law with what's happening globally as well.
As you know, YouTube was purchased by Google, WhatsApp was purchased by Facebook. And so what happens is that big tech companies that are very high market cap companies have plenty of cash, are able to make such killer acquisitions that then ends up choking off competition in adjacent markets. So to prevent these kinds of killer acquisitions, both the competition law, which now has a deal value threshold of 2,000 crores, as well as the Digital Competition Act that we are proposing has provisions for the Competition Commission of India to very carefully scrutinize the actions of big tech companies to ensure that competition is not being choked off in this fashion.
Well, that is what the Parliamentary Committee is looking at in terms of regulating big tech. We will head into a break, but up next, Air India has decided to consolidate its low-cost businesses under a single CEO. Alok Singh has been chosen to head both the LCC airlines, AirAsia India and Air India Express. Madiha joins us now with more. Madiha, this makes sense because eventually AirAsia India and Air India Express will be merged. So this is the start of that process.
Absolutely. You know, Alok Singh, who is the current CEO of Air India Express, has been appointed as the single CEO of the consolidated low-cost business of Air India, which includes AirAsia India and Air India Express. The announcement is not yet official, but according to an internal communication that is accessed by CNBC-TV18, Air India CEO Campbell Wilson announced that Alok Singh will be taking charge of the consolidated LCC business from January next year. Meanwhile, Sunil Bhaskaran, the incumbent CEO of AirAsia India, will lead the new training academy. He will steer the training school in producing homegrown pilots, engineers, cabin crew, airport managers and other professionals for the aviation sector. The decision to have a single head for the LCC business can be seen as a major step by Air India in segregating its business into two segments, as you likely mentioned: a low-cost carrier that will offer low-cost domestic and international services, and a full-service carrier that will offer premium domestic and international service.
Well, plenty going. President Zelensky in the US. Wheat prices have surged to an all-time high back home, costing between 32 and 36 rupees a kg, depending on quality. This has been one of the big reasons for inflation rising nearly 13% in November in the cereal category. CNBC-TV18 Santiago reports that with the widening demand-supply mismatch, prices may not come down anytime soon. Take a look.
These wheat fields were supposed to deliver a bumper crop this year, but that has not come to pass. India's wheat production has actually declined 3% this year. So against the projected 120 million tons of production, India has produced only 106 million tons of wheat. One big reason wheat prices have surged to levels not seen in years.
The prices has been up almost 30 to 35%. This is the stock with the government is lowest in the 6 years. And this has happened in the 2016.
Farmers blame this fall in production and the poor quality of the harvest on the heat wave that has disrupted cultivation season. The month of March was the hottest in the last 122 years. The prolonged and severe heat not only killed much of the crop, but also resulted in shriveled grain. India was also a little late in banning wheat exports. This meant that till the 13th of May, when the ban came into effect, India has already exported 5.3 million metric tons of wheat, 2.62 million metric tons more than in 2021. This has put pressure on stock available for domestic consumption. This shortage is also reflected in the government's procurement patterns. As of November this year, wheat stock with the Food Corporation of India stood at a little over 200 lakh metric tons, 52% lower than a year ago. One reason for this was that wheat prices in the export and private procurement markets was higher than what the government offered through minimum support prices. So the FCI has also had to cut back on the amount of wheat it offers through the public distribution system and in some cases replace wheat with rice. Wheat allocation under PDS has fallen from 44.58 million metric tons in 2021 to 24.42 million metric tons in 2022. With rising prices, private wheat traders have slowed down releasing supplies into the system, and that's adding to the strain.
The private traders who are holding the stock, they don't want to liquidate in one go. So they are selling at a slow pace. And in the mandi, the arrivals are very low because the farmers don't have the stock.
High prices has also resulted in lower demand for smaller traders who do not enjoy supply contracts with large companies.
इतना महंगा लेके गेहूं दुकानदार लाएगा, उसके बाद पब्लिक लेगी और पिसाई 6-7 रुपया पिसाई लग जाती है और वो गेहूं कम से कम आटा उन लोग को 40-42 तक आटा पड़ जाता है।
समझ लो लो क्वालिटी का भाव है, समझ लो 31 से 32 तक भाव है और गिरावट में क्या है कि काम कम हो गया, समझ लो तब आटे पे ज़्यादा हो गया, सब आटा ज़्यादा बिक रहा है, गेहूं का काम कम हो गया।
Farmers hope next year's crop will bring some relief, but that will depend on winter, which is crucial for wheat cultivation being normal.
Experts say wheat prices are unlikely to drop before March next year, which is when the new crop will reach the market. They believe next year will be better in terms of both production and prices and estimate that India's wheat production will increase by 8 to 9%. But a heat wave could throw these estimates for a loop, especially if this heat wave is more severe than those of the past years. In Navi Mumbai, with camera person Sohail Akhtar, this is Santya for CNBC-TV18.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18.